You're watching All About Stocks in ET now. Thank you for staying with us. Prakash Diwan is with us as well in our studio, and it's time for our portfolio section of the show. Now, this is a portion of the show where we look at your entire portfolio and we pick one lucky viewer who will have his entire portfolio assessed to tell him what he should be doing next. This week, Chandrasekhar has written in from the UAE. He tells us he bought his stocks in 2010 and he wants to know if he should continue holding them because some of them are not performing as well as he'd like. His first stock is Educom Solution. He has 100 shares which he bought at 515 rupees. Because that stock ended the week at 157, down drastically from that 52-week high. Do you think it has the possibility of attaining those levels again?
No, those levels seem really difficult at this point in time. The only sad part is if Mr. Pathak has to move out of Educom at these levels, he would actually have to take in a huge loss. But you would still be better off doing that rather than waiting for the stock to turn into some magical numbers.
The next on his list is DLF. He has 300 shares which he bought at 331. DLF ended the week at 185. Same question, Prakash? Book out at this point?
No, not really, because DLF is something that could bounce back much more significantly. In fact, it's been in this zone under 200 for quite some time. 185 is not something that you need to be worried about. You could probably see the share move into that 230, 235 zone, which means that you may not get back to his original acquisition price level, but at least he doesn't need to book such a hefty loss.
Alright. The next on his list is Coal India. He has about 200 shares which he bought at 245. Coal India ended the week at a little over 300. Coal India has some promise here. We've had various guests on the show saying, hang on to Coal India, it will reward you. What's your call on that stock?
Coal India probably hasn't grown at the pace people expected when it came through this IPO. But given the kind of clarity that's emerging now, Coal India should probably start moving into that value zone much faster. I think 360 is a decent price for him to book profits if he had to. But otherwise, even on a longer term basis, it's worth having in the portfolio.
Alright, so hang on to Coal India, and finally on his list is Power Grid Corporation, which he bought at 90 rupees. He's in the money here as well, but what's your call on Power Grid?
Power Grid is just barely in the money in a sense. There's not much of a thick margin that it's making. But again, this is like Coal India. It's a longer term story. And given the fact that we've really not seen the government spend start off on the power sector itself, the day it happens, the moment the government starts putting that into motion, I think all these companies will benefit tremendously. So Power Grid is one of the unique companies poised to benefit out of that sector. So I don't think there's any need to panic and move out. So hold on to that as well.
Alright, so when you look at Chandrasekhar's portfolio of these four stocks, is there anything you'd recommend he add to it? He doesn't have defensive.
And he doesn't have any pharma stocks. He possibly could benefit out of buying into pharma. He could have benefited much earlier had he moved out of Educom. But even at this point, buying into a pharma stock or an FMCG stock makes sense. And from the pharma side, I would probably recommend Lupin, though it's again moved into its 52-week high kind of a zone, but it still holds a lot of promise.
Let's move on now to Prakash's first stock pick of the week. He's brought us Reliance Industries. Take a look.
Reliance Industries, owner of the world's largest oil refining complex, is controlled by Mukesh Ambani and currently has a market cap of 2.2 lakh crore rupees. While it is largely an oil and gas exploration company, it also has diversified businesses like petrochemicals, textiles and retail under its umbrella. The company reported a 21% drop in profits for the fourth quarter of FY12. The fall was due to a 14% sequential decline in gas production from the company's prolific KG-D6 basin. Output from the basin peaked in June 2010 and since then has declined due to a drop in pressure at the reservoir. Gross refining margin for the quarter also fell 17% to $7.6 per barrel. This has led marketmen to believe that profitability will continue to remain under pressure till gas production and refining profits start looking up. Moody's went as far as to downgrade the company after it lowered its assessment of its gas reserves. The company recently took on a 13-year loan for about $2 billion to fund its petrochemicals expansion. The Reliance stock has fallen about 30% in the last year and hit a 52-week low just last week.
Alright, so that was Reliance Industries. The stock was once the darling of the market. I want to point out some statistics here before we talk about it. Retail shareholding has declined 3.3% in the last financial year. The stock fell 29% against 11% on the Sensex in the same period. The stock is now at a 3-month low this week. A lot of the people on the show over the last 6 months have said hold, but they haven't really said buy Reliance Industries. Tell us why.
At 750, I would definitely go ahead and say hold Reliance, but at 675, Reliance is definitely a buy. Very simply, if you look at the numbers that add up to the Reliance balance sheet, we are expecting a very moderate EPS of about 58-59 rupees for FY13, even with the muted production of gas and whatever issues it has. So 700 is distinctly a fair value without the 300 rupees of cash that it's sitting on. So, you're getting that cash entirely free at this level.
The stock has been range bound. It stayed between 600 and 800 on the higher side. How do you see it? Do you see it breaking that range at all, or do you think when you say getting at this point, that's the best we can hope for?
It would break the range. It would certainly break the range, and when it does, it would do it at a very rapid pace. In fact, it will be very difficult to catch the bottom in Reliance because when things start improving, you would actually realize that the earnings will grow in a fairly non-linear fashion. And when that happens, if EPS were to grow from 60 to 90, the stock would actually be double and not just 50% up. So, the Reliance is something which is a business that you can't buy in at these low valuations. None of the businesses of this scale is available globally with such low valuations. So, it is attractive. It's just a question of getting things right on some of the issues.
If we do get in at this point, at these levels, where do you expect our target to be, and how long would you recommend we stay invested?
If somebody were to be patient enough to hold on for at least a couple of years, Reliance could double from these levels. But you could probably book profits periodically because it's a bellwether stock. It does move along with the market more sentimentally at times than fundamentally. So it makes sense to book profits at various levels. But if we were to do a long-term buy and hold, then definitely 1250 in 2 years is what I see.
Reliance there and on again, off again relationships with the market. But Prakash said, if you buy it now and you're willing to hold on for the next 2 or 3 years, you could see your money double. That was the first of those recommendations. After the break, we'll talk about his second recommendation, Sanco. We'll tell you why that stock is interesting. We'll also answer some of your questions on pharma stock. Stay tuned.